Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
Today, we are going to break down a really powerful 5-step process. Think of it like a filter that helps you get rid of all the noise and really zero in on high-probability trading breakdowns. If you are sick and tired of getting caught on the wrong side of a move, well, you're going to want to see this. Let's get right into it. So, let me start with a question, and I'm pretty sure we can all relate to this one. Have you ever been absolutely convinced a support level was about to just collapse, only to get completely run over by a sudden reversal? Yeah, it's got to be one of the most frustrating things in trading. You see the price push through that critical line. You're thinking, okay, this is it. This is the big one. You hit that sell button, and then, just moments later, the market rips back in the other direction, smacks your stop loss, and just takes your money. You know, that wasn't just bad luck. You got trapped. Plain and simple.
And this right here brings us to the most important point of all. The real edge in trading, it doesn't come from some secret indicator or some kind of magic formula. Nope, it comes from having a repeatable, disciplined process. It's all about having a filter that tells you when to act and, maybe even more importantly, when to just sit on your hands.
So to build that process, first we have to understand why these traps even happen in the first place. And it really all comes down to this fundamental concept we can call the order of play. You know, it really boils down to something super simple. At any key level, the market can only do one of two things. It can hold or it can breach. That's it. Now, a true breach isn't just random noise. It's actually a fundamental shift in sentiment. It's like a regime change where the bulls finally give up and the bears take complete control. Our entire job is to pinpoint that exact moment. And that brings us right to the first step of our filter, detection. This is the foundation for everything that follows. And honestly, it's where a lot of traders already make their first mistake, just by rushing things. So, step one is all about identifying a true hard wall of support. And I mean, this isn't just some line you scribble on a chart after one or two little bounces. We're looking for a significant level, one with multiple, valid touch points. It has to prove that it's an area the market actually respects. And here's the key. This work is done before the price even gets there. We are preparing, not reacting. All right, now for step two, confirmation. And I really want you to lean in and pay close attention here, because this one single step is where the vast majority of traders get completely wiped out. And that is not an exaggeration. We are literally talking about a huge number of traders falling into the exact same trap, over and over and over again, right at this stage. So why? Why does this happen? Well, it's because they jump the gun. They see the price just poke its head through the line, and they immediately smash that sell button. They don't wait for the market to actually show its hand. They don't wait for confirmation. Okay, let's look at the difference here. On the left, you've got the trap, what we call a liquidity grab. The price just wicks below the level for a second to trigger all those sell orders before it snaps right back. But on the right, that's the real signal, a confirmed close. A full candle body finishes its entire session below that support level. That shows real commitment from sellers. That's our validation. One is just noise. The other is powerful, actionable information. So once we have that confirmed signal, and I mean only after we have it, then we can move on to our trade plan. Steps 3, 4, and 5 are all about disciplined, calm execution. So here's the game plan. Step 3 is your entry. You can either sell as soon as you get that confirmed close, or you can be patient and wait for the price to come back up and retest that broken level. That's your trigger. Step 4, your stop loss. This is so crucial. Place it above the high of that breakdown candle, not right on the support line itself. This gives you a margin of safety. And finally, step 5 is your target. Let's not be greedy here. Just look left on the chart and find the next major support area. That becomes your price magnet. Okay, so now that we've gone through every single part, let's put it all together into one simple, powerful checklist that you can use on every single trade you consider. Here it is, the 5-step breakdown filter. Before you even think about placing a trade, you have to ask yourself these 5 questions. 1. Is this support level a real hard wall? 2. Do I have a confirmed candle close below it? 3. What's my exact entry trigger? 4. Where is my margin of safety? And 5. What is the price magnet I'm aiming for? And listen, The rule here is absolute. If a potential trade fails even one of these 5 steps, you walk away. No exceptions, no what-ifs. You just don't touch it. The discipline of following the process is what protects your capital. Miss one step, you miss the trade. Period.
So, the final question I'll leave you with is this. When you really look at your own trading, are you truly filtering your opportunities through a disciplined process? Or are you just kind of guessing and hoping for the best? This checklist, right here, can be the difference.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.